Good morning, ladies and gentlemen. Welcome back to the second session. It's my time to start, so uh, that's based on my steel long products presentation. This is the contents of the presentation. I have to tell you that it took me when preparing the presentation. It took me in the middle of a turnaround, so I had for 3 or 4 days. I had really problems because numbers were changing every day. But what I'm trying to do here is I'm trying to give you the big picture on what is happening in the market. Also, I have to say that seeing the two presentations before, some of the topics has been discussed, and obviously have been discussed by experts and in depth. So I may go quick through a couple of slides. The good part is that I've seen that we are coincident with them in terms of the conclusions on what is happening. This is, as a first slide, macroeconomics. As I said, I'm going to go quick through this one because basically it's the same thing that has been said, is that the world is growing, but it's growing at a modest pace, more in advanced economies, although nothing great also there. And some emerging economies are having trouble because of China, because of restructuring of reorientation of the economy of the country, and also commodity prices and macro or geopolitical problems in certain regions. So we see, as a key figures, we see United States or advanced economies are expected to grow at about 2%, 2.1% in the years to come, in the couple of years to come. Euro area is modestly growing. The good news is that we don't believe we're going to be back into recession, so this is good news. And then emerging countries, Russia still with some problems because of oil price. Some Latin American countries also, Brazil in trouble, and China apparently reducing a bit the speed of the growth. So let's go now on what it is what is happening in the steel industry. And what we see here is that for the first time in many years, in 2015, we reached a peak, and there was the end of a major growth cycle that was based basically on the quick economic development of China. So if we see the figures, and we go to the general world, we see that in 2015, for the first time, the market contracted 1.7%, and for 2016, the forecast is almost flat. Excuse me. Why? Because one of the big players is still in negatives. China is still in negative, slowing down, so the steel demand will stay basically where it is now. And as we have seen, the slowdown in demand has been remarkable in China, and that we have all been following. We were all following that in 2015. That pushed export of China outside of their markets, and so that took the price of steel products down, boost trade tensions, a lot of trade actions everywhere, and it take the financial performance of many producers around the world to very unacceptable levels, and that also has been discussed before. If we now go and see after demand what happened to production, is that seeing what was happening in China, world steel producers reduced output in 2015 to adapt to new demand level as steel prices sank and trade sanctions increased. And we can see that. I have to trace here that change. We can see that starting about July, mid last year, we see production going down, and in all areas, China and the rest of the world going down. In terms of percentage, about 5% about 5% going down in general. So basically, because as the low demand, low prices were hitting the margins of the mill hard, making and producing the marginal tons didn't make any sense. So there was the reason why production went down. I want here to quote a sentence from Mr. Chairman of Bar Steel that was about November, when he said that in China, output may contract by a fifth. So this is 20% down, matching the experience seen in the US, Japan, and Europe. China will eventually get there as well. This is what that gentleman said in November. So it's the fact that players in the market are seeing that the only way to come back to a healthy market is try to adjust that production to demand. Another very key that has been mentioned also before, but I want to take a bit of time to talk about it, is capacity utilization. Well, as a result of reduction in production, we had a decrease of utilization, which is basically a ratio between capacity and production. This in the industry, well, today our colleague from BNP Paribas has said that it's 70–75%, but we believe that 80% is what is the line between profitable and unprofitable. And we see that since July last year, when all the big travel started, utilization went down to below 70%, down to levels like 66%, 65%. Well, that's the result that obviously, or does this as a consequence, losses spread worldwide. China, large and medium mills lost about 10 billion in 2015, and exactly the same happening all around the world. Big players in the world, they were having very similar numbers. So this is purely unacceptable and unsustainable. Because of that, restructuring actions are taking place in China, in Europe, in America. And we are seeing, in all these markets, we are seeing temporary and permanent stops, and also real shutdowns are also happening. We are seeing that in all three continents. Also, it's a factor that the pressure on funding as banks were tightening loans and also damaged balance sheets are requiring companies to asset selling, consolidation, and all these things are already happening. Also, something that is creating pressure in the business is debt positions in companies that are also cause of tension with lenders. So all this is happening, and as I'm saying, this is happening in Europe, Central Europe, Southern Europe, this is happening in America, and this is happening in Asia. So all these things are happening already. And we can see, just as a result of that, we can see that Paris consequence of utilization is going back up a little bit due to all these things happening. But obviously we need much more if we want to get back to the 80, a lot more. So if we talk now about long products, well, long products, we didn't escape about the general trend of the market, the steel market, and so the consistent growth that we had, even on the bad years of the crisis, because of Chinese pushed in terms of steel consumption, it was finished in 2015, and we had a slightly lower figure than 2014, but we will see later a little bit. This slightly lower figure was really because the second half of 2015 was clearly worse than before. Now, if we see it by regions, just to have an idea where demand of long products is happening. This is the pie. And we see that if we took together Asian markets that account for 70% of the demand, of the consumption, sorry. And China, even in 2015, was more than 50%. So obviously what happens in those markets is felt, obviously, all over the world. And that was the comment I was making before. This is the growth. And what I'm taking here, I'm taking the second half of 2014 compared with the second half of 2015. And we see that basically reduction, huge reduction in what it was the Chinese demand. For the total for the world was 7%, China was 12% down, North America went down as well, and CIS. A bit of an increase in Europe coming from very low levels, still in Europe from the past recession. Turkey shows an increase, and Middle East also, because of all geopolitical tensions in certain countries, was showing a decrease. We go to the rebar market, almost the same picture, even a bit more significant, the drop of tonnage in 2015, and exactly the same song. 2015 was the end of the good times. And if you see the pie here is about the same, but maybe not as the percentage is not as big, but 75% of the rebars, they are consumed in Asia in general. 50% are consumed or were consumed in 2015 in China. And now if you go to the rebars, we see that the world demand of rebars went down compared again, second half against second half went down 5% in the world, 2% in North America, 7% in China, CIS, because of the slowdown of the economy in Russia, 17%, this is what the figure says. And Europe, again, back from very low levels, 5%, Turkey up 11%, and the Middle East down 12%. I just wanted to put here wire rod because the behavior of wire rod is a bit different, as it sometimes is more related to manufacturing. Wire rod figure for the world is similar, -5%, but then in terms of regions, wire rod went up in terms of growth in North America, down in China again, down in CIS, almost flat in Europe because wire rod, the level of consumption of wire rod in Europe is already high, very well recovered from the crisis because of automotive and all the things are going well. Turkey up and big drop in Middle East. This is something that is, I would say, key in all these discussions we are having in these IREPAS, and this is the how rebar production and demand is distributed in the world. And we clearly see, I've drawn that in red, the areas where production in 2015 was higher than demand. So we can see that in North America it's green, so it's fine. They need to import a little bit. China, clearly, production was more than demand. A bit in CIS. In Europe, we still have a problem of overcapacity. Turkey, again, they are producing a bit more than what the demand, the existing demand. And in total, if we take the world, in 2015, we produced about something like 28 million tons, an excess of rebars. What do you do with this? I mean, that cannot go anywhere. So basically, excess of supply as demand has been dropping has created unprecedented losses amongst producers. This is the main reason. And economic sense and financial restrictions will get the industry back, and it's already taking the industry back to more healthy balance. And as I said before, the process has already started. Well, here's one that, okay, I did my best. In fact, I put some figures there. They are not the figures of today, but it's just to see the trend. And one thing that has been said here, and I agree, is that I believe that we have reached the bottom. I mean, obviously, being a mill, we saw the effect that the price level of had in our PL accounts in February, January, December, excuse me, November. So I think that was the bottom. It's hardly to see that we're gonna go back to that low level. Something that is really, when you see the figures, is shocking. Spread 255, 300, 400, 200, 200, 200, 200, 200, and suddenly 195, 155. So this is the difference between a scrap price and rebar. So that, for me, this is the bottom. So I'll try to summarize all what we have said. So basically, growth in long products will be challenged by the continuous drop of demand in China during 2016, as we are expecting drop in demand. Obviously, other areas will have a modest growth like America or Europe and could compensate them to maintain global levels, but it needs to be seen if that growth is going to be enough to compensate the reduction in China. Steel industry is facing for the first time, and long products industry is exactly the same thing, is facing for the first time a global capacity issue that has created an excess of supply, global excess of supply. So price dropped in 2015 to levels that made losses mount everywhere and reductions spread around the world as never before. As the next one is output level is a problem to be tackled, and actions are already being taken. Overcapacity is concentrated in a few regions, and this is where reductions are happening. That will continue until factory utilization gets back to profitable levels, as producers cannot carry on burning money with no clear demand picking up. Prices rebounded recently and margins recovered from historical lows. We believe that was clearly the bottom. And the last one, just trying to make a summary of everything, all that are signs that we are all even past the lowest part of the cycle. We really believe that that was the lowest part of the cycle. And the time it will take to get back to a more reasonable business environment will depend exclusively on how quick restructuring actions are taken, but it needs to be seen how quick they start to show results. Okay, that's all for me. Thank you for your attention. Thank you very much.